Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss the recently launched index tracking Nasdaq-listed small cap Innovators. Mark, it's great to see you as always. Welcome back to Trade Talks, and let's kick it off with an overview of the new index and how it's composed.
Thanks, Jill. Great to be back. And this is an index we launched in June. The full name is the Nasdaq Innovators Completion Cap Index, kind of a mouthful. The ticker is NCX, and really it's an index that's designed to kind of give an extension to the existing innovation suite that we have, obviously anchored by the Nasdaq 100, extended kind of from the large cap into the mid cap space with the Nasdaq Next Generation 100, ticker NGX. And so, what I'm showing on this first slide here is really kind of how we get to the exposure by picking through what's in the NASDAQ composite, sort of outside of those other two indexes, the NDX and the NGX, and being consistent in terms of the methodology as far as excluding certain types of companies from potential membership in the index, specifically anything in the financials or real estate sector. So if you kind of zoom out, right, and you look at the NASDAQ composite, X those two indexes, it's around 3,500 companies. Take away financials, real estate, it's even fewer than that. Really what you're left with is a pretty interesting mix where you've got healthcare as the biggest sector, 29% there in the yellow. This is by total market cap or index weight within the composite. Your second biggest sector in that remaining group is about 21% technology, and then followed by about 18% consumer discretionary. Decent actually weightings for things like industrials, energy, and consumer staples in there as well. And so when you look on the right side of the screen and then you kind of segment out the NASDAQ composite in a different way by segment by whether it's part of the NASDAQ 100 or some of these other categories that we're talking about, right? You see that 75% basically of all the NASDAQ listed market cap that is in the composite that tracks everything that's NASDAQ listed is just from those 100 companies within the NASDAQ 100. So it's really, really top heavy, right? NGX is the next sliver there at 6.4%. That's the next 100 largest non-financial companies listed on NASDAQ. And then you've got NCX in the green, which is just 1.5%. So it's really a very, very small sliver of total listed market cap on NASDAQ. It's under 2%. You could see the rest of the composite there is 11%. And then the financials real estate sliver is only about 6%. So we're really zooming in on a very, very small sliver of total listed market cap in zeroing in on that kind of mostly small cap group of companies that are left over after NDX and NGX.
And Mark, your team has done some back testing here. What can you tell in terms of sectors and turnover here?
Yeah, so kind of what I alluded to on that first slide, right? Healthcare is a big chunk of this index. When you think of the NASDAQ 100, you think of it as a tech-heavy index. It's usually 55 to 60% tech. The second biggest one there is consumer discretionary. Those together tend to make up about 80% of the index. And healthcare is anywhere from 5 to 10%, depending on the year. For the NGX, it's less concentrated from a tech perspective, but tech is still the biggest sector. Healthcare in that index tends to be a lot more substantial than in NASDAQ 100, closer to about 20% at times. And then kind of a more diversified sector exposure across the rest. So NCX kind of continues that trend and has healthcare at recently a little bit more than half of the index weight. You can see in that kind of biggest dark blue-green shading. It's been growing a lot since the earliest days of the backtest at the end of 2011, when it was about a little under 30% of the index weight. It's almost doubled, and it's partly a function of the fact that NASDAQ wins something like 98% of biotech listings in the U.S., has close to 700 biotech names alone listed on the exchange as of a recent check. And that doesn't even include other healthcare names that are in places like med tech, med equipment, healthcare services. So healthcare, once you get out of large caps, makes a bigger percentage of the mid cap space, at least within NASDAQ's world. And then when you get into small caps, makes a really, really big percentage of it. And you can see that carrying through here as that is the biggest historical sector, and it's also been growing and kind of taking up share from some of the other areas like technology, for example.
Right. And if we take a look at the next chart, the most glaring thing to me when we talk about historical performance and even what you're seeing for this recent quarter, the outperformance is pretty glaring there, Mark.
Yeah, so take a look at, the entire history of the back test. What we're showing here in that bigger chart is Nasdaq 100, NDX is the undisputed leader, continues to be. COMP, that's the composite. That's sort of in the middle there in the gray. And again, that's driven mostly by the fact that 75% of the composite is Nasdaq 100 companies, right? And then the next bucket there is the green and the black, which is respectively Next Gen 100 and NCX. You can see how very close they end up to each other, and we've purposely kind of designed this index to try to give people the same type of exposure to innovation leaders as the NGX does. NGX kind of naturally fills that requirement because it's the companies that are kind of waiting right outside the door to gain membership into the Nasdaq 100, right? So we know that a lot of them are going to be innovator champions to get into that second group of 100 largest companies on the exchange. NCX looks at patent portfolio values. We use an external data partner, IPR Strategies, which is actually their data is available through Nasdaq Data Link if anyone wants to subscribe. And they've come up with a methodology to value entire patent portfolios across thousands of publicly listed companies globally. And it's with that data set really that we were able to zero in on the 200 names at any given point in time that are Nasdaq listed that have those really compelling, not just total value of patent portfolios, but also as a percentage of their market cap. That's kind of how the index works. It's the top 200 ratios of patent value to market cap that make it into this index. And you can see the result is really, really close performance to NGX and substantially outperforming the Russell 2000, which is the broad small cap benchmark in the yellow there over a very, very long time horizon. You could see towards the end of that chart, performance recently has been, taking a turn for the worse, just like a lot of the rest of the U.S. equity market and specifically within growth. But now I'm showing you since the cutoff of that chart, June 30th, what have we seen performance-wise? We've seen really all the other indexes in that chart kind of recover nicely, but grouped together around 19-20% quarter to date. Now that we're halfway through the third quarter, NCX is really outperforming, up over 30%, really kind of leading, I think, a rebound because of the expected cool down in inflation, the expected cool down in interest rates rising, and I think a recognition that a lot of these areas, especially the really innovative companies, got dragged down with the market correction the first half of the year, somewhat unfairly, more so than they deserved, kind of dragged down with the rest of the group. That's how I read into it.
Mm-hmm. And Mark, in the last minute here, let's take a look at your last chart. We were taking a peek at style analysis. Explain to us what we're looking at here.
Yeah, so this is a quick way of just visualizing where this index falls on the style spectrum. So when you look at the Russell Small Cap, that benchmark of about 2,000 small cap companies in the U.S., you could really split it into two buckets: small cap growth, which is on the left, and small cap value, which is on the right. These are daily returns plotted against daily returns of the NCX. Since the beginning of the backtest, you can see those dots are much more tightly packed in when you plot NCX versus the small cap growth portion of the Russell 2000. That translates into much higher correlation, 0.94 versus 0.81 versus the value, and a much lower tracking error. It's only about 60 basis points against growth versus 97 basis points against value. So those are just kind of a few indicators to give people a better sense of, where does this index fall on the style spectrum? While we don't specifically screen for growth factors, the fact that, again, we are selecting based on kind of innovation growth driven factor like patent portfolio value gives you, I think, a pretty strong exposure to growth overall within the small cap space, not to mention coming on top of the fact that these are Nasdaq listed companies only, so they tend to be younger. they tend to concentrate more in those new economy growth sectors. So I think it's a pretty consistent story from that part. And again, continuing that theme with the full innovation suite of focusing on, new economy, innovation-driven growth, whether it's large, mid-cap, or now finally in the small cap space as well.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.